Hedge funds are piling into the crude oil market, betting that the price will soon pass $100 a barrel, and adding an impetus to a rally sparked by the output and export cuts from Saudi Arabia and Russia. Saudi Arabia's extension until December of a 1 million barrel a day oil cuts, in addition to further cuts under its OPEC Plus target, has compounded Moscow's move to limit exports and pushed prices for Brent crude, the international oil benchmark, to $95 a barrel this week, a fresh high for the year. Exchange and regulatory data suggested hedge fund positioning had exacerbated the near 30% move higher in prices since June. I think from late June, I believe, with a surge in buying accelerating in the past 2 weeks for both Brent and US crude futures. The latest data show that the combined fund net long position in Brent and West Texas Intermediate, the US benchmark, jumped by 137,000 contracts, or 35%, to an 18-month high of 527,000 contracts in the 2 weeks to September 12th of this year, 2023. The figures are equivalent to more than 500 million barrels, or about 5 days worth of global demand. A widely followed proxy for the activity of speculative players such as hedge funds. So an expert in the field, Doug King, Chief Investment Officer at RCMA Asset Management, who runs the 300 million merchant commodity fund, said that he was not convinced oil would go much higher, as the strength in the market was being driven by OPEC Plus supply restraint rather than particularly strong demand. According to him, the move is not massively structural; it is more contrived. Okay, and he went on to indicate that we are currently approaching the upper end of this move, in his view, and if we get above $100 a barrel, he suspects we will see more barrels leak out onto the market and deflate the spike in prices, okay, or deflate the bubble. Other investors were using the options market to hedge against prices passing $100 a barrel before the end of the year. As of last Friday, that is Friday the 15th of September, funds had bought about 37,000 call options in WTI, that is West Texas Intermediate, which gives investors the right to buy a commodity expiring in December at a strike price of $115, according to Charlie McElligott, an equity derivative strategist at Nomura. So indeed, okay, so we have so far some contracts have already passed to be executed at $115. So who knows what's going to happen. So given all of these, we can see what's going on. Let's see what's going on with some of these oil stocks. Let's see. Okay, we have here, this is PXD. Okay, so you can see some of these stocks started to rally began to rally late June. That was when this spike in oil prices began. And some of them, like the PXD, Pioneer Natural Resources, it's also one of the stocks the folks at Motley Fool are saying 3 oil stocks to buy as crude crosses $90 per barrel. Okay, so the stock has actually started to cool off, reached this high of $242 as of early September. So a run of the best part of July and August, and started to cool off now. Okay, started to cool off now. It has upper projections all the way towards $310. Okay, and the 10-day moving averages are suggesting there is more weakness is expected to come. It has a downward projection of $202.18. I think what this is suggesting for sure is that much of the money has already been made. In some of the oil stocks. Okay, so let's look at DVN. Okay, DVN, we have weakness as well. Weakness is suggested on its 10-day moving average, but before that time it might hold. The 10-day moving average might hold, but the stock itself is retracing. We also seen as of the just like Pioneer Natural Resources, it peaked. I would say, is that a peak? Okay, let's see whether it started to show strength. Yeah, as of late June as well, started to show strength. This is the peak of this recent rally to $54.04. Moved down a bit and spiked again. So, is there any suggestion it might move up again? Let's look at the weekly chart and see what is going on there. Okay, weekly chart is suggesting that we might have as of Monday the 30th of October, we might see the stock would have the weekly prices. The weekly prices would have may rebound to around 53.81. It closed yesterday at 46.41. This is what is suggested on the daily chart, on the weekly chart. So let's return again to the daily chart for Devon Energy Corporation. So these are daily charts. They print every day, every day. So you can have 1 week of sideways or downwards movement, and all of these may not reflect on the weekly chart or even the monthly chart because they print every day, and the weekly obviously prints every week. So, but on the weekly chart, we're not seeing anything. The suggestion is just more of more weakness, 45.30. The whole what the summary of it all is that the money has already been made. The money has already been made from late June. That was when we saw this rally. Even Devon also offered a second bonus. You can see that this is the first cycle. This is the first leg of that rally from when oil started to rally. Okay, this is the first cycle, up one here and down one here. So it is it's on the second leg of its second cycle. I want to believe. I don't even know what it's going to. No, but I don't know what it's going to continue to retrace. But oil is suggested. It is speculated that it could even top $100. We have seen that, as I mentioned earlier on, that as of Friday, the last Friday, the 15th of September, around 37,000 call options were traded, and those were for oil to be those contracts were to buy oil at $115. So there could be other factors that can deter that or mitigate against that. So let's look at the MRO. We have MRO Marathon Oil. It's also one of the three stocks that the folks at Motley Fool are talking about. So that's behind our decision to have a look at it. Just like them as well, the 10-period moving average on this daily chart is suggesting weakness, and just like them as well, it started to rally in late June. So MRO, was delivered, even though at various times it retraced, but it delivered this peak of this double peak of 27.34. So as a matter of fact, there might be a suggestion that it has a double peak has been placed, and we can clearly see that it has fallen above below a lot of its support. So maybe some weakness is still very much expected, and that is probably what the regression read into, the regression that predicts the 10-period moving average. So you can saw this retracement through a lot of supports. So there's a downward support here of downward projection of $25.68, and then there's another one here of 25.11, and then there was also 23.49. So all these three stocks have continued to show weakness. I think what it's what is absolutely clear, you can clearly see, is that the money has already been made. At least for the past 2 months, the money has since been made. But they can all of these might change as well. All of these might change. What is absolutely certain is that market participants have they are taking profits from positions but at lower prices. That is absolutely what has been going on. This week we can actually nothing stops us from having a look at Chevron, CVX, and see what it is as well with Chevron. This is it's same thing as well, and just like them has shown some weakness, but not a huge amount of weakness. And then also the suggestion that some retracement might occur, but at the same, just unlike all the other ones, it is suggesting that it might rebound again. It might rebound after showing some weakness. It might rebound as of next Friday. That it might things might look up, but what is the suggestion, just like all the other ones, is that some more weakness is expected in all of them. Who knows if oil still is still very strong come next week, next Friday, that's 29th, or even sometime in the week, this coming week. That's the week that will begin on the 25th. Then those who took profits, who are taking profits right now, might want to come back for more. We can, but nothing also stops us from having a look at XOM and ExxonMobil and see what's going on there as well. Just like them as well, but very much like Chevron, there is a suggestion that come the Friday the 29th as well, we might see a rebound of its 10-period moving average, just like them as well. As of okay, let's see, when did Chevron's rally? June 23rd, it spiked, and then actually even fell below the low. It's this low of this Friday the 23rd of June low, when all of that was the pivotal session for most of these oil stocks. But at some point Chevron actually, Exxon actually fell below that price, but since that time it began to rally, and I think this looks like a 52-week high. I want to believe something around $115.06, and currently showing some weakness here. What is absolutely certain is that yes, investors, market participants are taking profits from positions but at lower prices. So see what you make of all of these oil stocks, and I'll definitely continue to update you. Thank you very much for watching this video.